So let me give you a little bit of my background. I have been in a number of startups and operating roles, as well as on the investing side. I was at Intuit when it went from 30 people to 3,000 people, and ran product for a while and took on senior vice president and operating roles while I was there. So Quicken and TurboTax and some of those products you may know. Ran a company called Baby Center, which we sold to Johnson & Johnson during sort of the dot-com days, and had an executive in residence at Kleiner Perkins, where I then incubated and wrote the business plan and launched a company for them that they were supporting, and then went and ran a company in the mobile game space. I'm currently sitting on a number of boards, advising some startups, doing some angel investing, and doing some advisory work over at Stanford. So a little bit of my background from that perspective, and part of what I want to talk about today is from the perspective of both a CEO in how much investors, when it's helpful for investors to engage, what you want from investors from that perspective, and also from the perspective of an angel investor in deciding sort of how much to engage, when your involvement helps, and trying to provide some perspective from that point of view. What I'd love to do to get a sense of where you guys are at, how many people here are full-time investing? A couple of people are full-time, so that's maybe 3 or 4 people are full-time investing. And other people are have done any investing or sort of dabbled just a tiny, dabbled. Okay, so dabblers and maybe new, sounds like the rest of the folks were brand new to doing angel investing.
And there's accelerators, people that run accelerators.
Got it, excellent, nice. Big fan, I like the accelerator approach. I think that helps a lot. So let me, if that's helpful, I can talk a little bit on that too. And okay, so I think that let me ask one other piece. How many of the folks here have had prior operating roles? You've been inside a company, you've been at a senior level, you've been running things. So that's like 3 people. Okay, so I think when you're investing, as you know, very few early stage investments end up making it to the end. So in my opinion, you might as well invest in things that you also enjoy being a part of. At an early stage, a lot of what a CEO needs, certainly there's money, but in the ideal situation, as an early stage CEO, you would like to choose who your investors are. And you would like those investors to bring something to the table other than their money that is helpful for you in growing your company. And so that can be a variety of things. That can be contacts, and from a contact perspective, that can be potential business partners. It could be potential sales channels. It could be contacts within the venture community, so looking ahead to an institutional round of financing. It can be contacts within, oftentimes sort of local universities where you might be going to pull your engineering talent from, or contacts into sort of, networks that can help you source talent. And in fact, what I often advise the CEOs, is really to be thoughtful about putting together their investor consortium so that, while it's a lot of work to raise your first round, depending on who's in your first round, helps decide whether your next round is easier to raise or not. So the reality, the unfortunate reality is a lot of times people will start to get just needing money. And so they get to have a lot less choice involved necessarily into who is coming on board. You, from an investor standpoint, I think is, as a CEO, one of the worst things that happens is when you get the investor who believes they know everything about the market you're going after. They completely understand how hard it is, or the reality is how easy it is to get stuff done, and have their own agenda of what you should be doing. And that's a scenario that starts to put the CEO in a no-win situation, depending on how well aligned those visions are. Obviously, if the vision is pretty well aligned, that's great. To the extent those visions are very different, the CEO loses his credibility either with his investors or with his team. And so the CEO, it gets put in a very tough spot that I would argue reduces the chance of your investment being successful. If the CEO is feeling like he or she is on the defense with either his investors or with his own team in shoring up his credibility, he is unlikely to be spending all his focused efforts on moving the business forward, which is what you want that person to be doing. You want the CEO to be spending 80 hours a week, or every minute of his time at least thinking, if not actively working, to move the business forward. And so what you need to be doing is to be thinking about how your contributions are aiding in that effort. And that's where I would come back to the observations that you can have about contacts, understanding the goals and objectives of the CEO and the company, and understanding how your experience and your networks can accelerate the ability to accomplish those goals and objectives. The ability to set goals and objectives on a time frame of increasing length is relevant to the stage of the company, right? So at a super early stage, where those with accelerators, they're trying to figure out what they're doing. And I think it's the benefit of accelerators in providing the mentor relationships for these CEOs, especially the CEOs without prior experience, right, who are the ones who are in most need of that mentorship, is a great opportunity. I've definitely been encouraging new first-time CEOs to take advantage of accelerators because of the ecosystem that gets put around them to provide the counsel and guidance and to help make those connections, and that they got accepted into an accelerator. I put together an angel investing group and had a few folks come and present a couple of weeks ago, and those who could say they were one of a handful who were chosen out of several hundred applicants for an accelerator, and then they got chosen for the next thing out of a couple hundred applicants, starts to really build their credibility in the minds of potential investors and puts them certainly on a scale different than others. And the hardest thing for a first-time CEO is having any establishment of credibility, right? The CEO who's done the startup, had a successful exit, they've got a lot of credibility, they have prior investors that they can go to. That's a different scenario than the first-time CEO, especially if they haven't been a part of a Facebook or a Groupon or a Google or someplace where they can point to having gone through some of that process before. So I think you need to really understand how and listen really carefully, and differentiate the agenda of the CEO to your agenda. And make sure that you are listening carefully to those needs. I always find it, I think one of the, so put yourself in this, in the position of the CEO, the startup environment. You're really dedicating all of your energy and to making this successful, right? Otherwise, you wouldn't be doing it. I mean, the definition, right, for an entrepreneur is somebody who's crazy enough to put everything at risk and go after this startup, especially at these early stages. And so in addition to the investor who has their own agenda, there's the investor who says, happy to help. Tell me what I can do. gotta tell you, not my job to understand, to do the work to figure out your, all of your connections, your background, where all those things are. That's another piece. For me to do a good job of that is to go out and do a whole ton of work and try to figure out who you are connected to. That could help me. If you really want to help me understand what I'm trying to accomplish, and you do the work of looking through your network and offering some things, and then letting me say, oh, that would be great. Nope, that's, I don't think that one fits right now, maybe in a few months. Give me 5 or 10 things or a small list that I can respond to. It takes a lot of work to respond to a greenfield offer of, oh, tell me how I can help. Well, I need to build a business, right? I need to build a business, which means I got to find revenues, I got to hire people, I got to build a product, I got to probably raise more money downstream. Those things are pretty standard with any business you're going to be a part of. And so starting to focus and understand your value add along those kinds of dimensions up front will be very, very helpful to the CEO. I would also argue that the more value you can provide to that CEO, the better relationship, the better set of information you're going to have about what's going on inside the company. And to the extent that information can help you both provide more value and keep an eye, right? Private companies don't have a lot of regulations around disclosures. So the more engaged you can be in actually providing help moving forward is a great opportunity for you to have a better hands-on feel about the company's sales pitches, product progress, how they're interviewing people, a lot of stuff about what's going on inside the company, which hopefully, again, motivates you to come back and figure out how you can maybe be a part of shoring those efforts up. As a having done some angel investments, I've got some where I've put a little money in, made a lot of money, had some where I put a medium amount of money in and got a tiny amount of money back, some that are still in process, some that haven't worked out even at all. And so I do find that whenever I start to feel like, oh, I'm just going to put my money over there and not worry about it, that's when things just don't go as, at least it's a small sample set, but personally, I've started to come to really the realization that if I'm going to make an investment, I'm going to need to figure out how it's not just, some money among a large group of other people's money, that I'm putting in, but how else am I really adding value to the company, to the people who are there. And so, where I've been able to do that, I've been able to realize a better sense of return, a better return on the money that I've invested. Could be coincidence, could be that those of us who've got a little bit more experience under our belt can really add some value that makes a difference in the lives of these entrepreneurs as well. So those were a lot of the core messages that I wanted to convey and get across to these guys. I wanted to kind of make sure I opened it back up and answer any questions that you guys might have from perspective that you gained through a lot of discussions yesterday that might be helpful. And if not, I've got some other topics I want to sort of convey as well. So any pieces of questions on that or questions on things that came up yesterday? Yeah.
I'd just like to ask, that was a really good point about the CEO being in the middle of the teams and the investor. From your experience as a CEO and obviously also as the EIR, would you have any tips for those CEOs?
Yeah, so
they're also mentoring people in accelerators, so
got
that
it.
would be helpful.
Yep. So I think one of the things that I do try to encourage the CEOs to do is have somebody who can help them, either somebody who is also an investor that they have some previous experience with, or a mentor that can help them manage either their board or the other investors. Somebody who can help basically, call bull or whatever you want to say, try to help get the rest of the board or investors in line. Because again, you want, in my opinion, you want the CEO spending all their time building product, building business, not managing politics so much. I do encourage CEOs to try to send out even a brief weekly update, you know, or worst case, a monthly update. I'm a big fan of the weekly update because the bar is a lot lower. I can, in 15 minutes at 4 o'clock on a Friday afternoon, just write down very quickly, kind of like, here's the stuff that's going on this week, and keep either, you know, a board of directors, an advisory board, or a, you know, set of investors up to speed. If I wait a whole month, then that's it's a lot bigger task. So although people tend to go, ooh, every week, that seems like a lot, I would argue that it's less work to just get in the habit of just very quickly sending out an update, and to keep it, to establish patterns of regular communication. And those patterns of a regular communication will come into play as the company grows as well. So as you move from having 3 people to 10 people to 20 people to 50 people, having a regular pattern of, you know, an email communication that just goes out to everybody on a Friday afternoon, you know, congratulating some people on a job well done, highlighting deals in the pipeline, milestones achieved on a product perspective, starts to teach the rhythms that are good practices in leading an organization over time as well. And so I think, you know, for those who are advising CEOs, I would encourage to just have a nice simple template. You know, here are the key achievements. Here are the goals for, you know, here's what I expect to be done the next week. You know, here are my red flag issues, you know, and here are, you know, just some things that happened that nobody needs taken, you know, sort of a set of FYIs, or, you know, kind of some nice little simple bullet point structure that they can keep using over time as the company grows. And I think I'm a big fan of just keeping things, you know, even like red, yellow, green, you know, on a little Excel thing of just sort of what's going on is just really easy to not have to spend time updating on everything. If something's green, that's great. I'll go give a pat on the back or send a quick email to somebody saying great job. You know, the other thing I think recognize is a lot of times in the very, very early stage environment, depends a lot on the culture of the team. One of the things I try to do is figure out, is the team already got a strong cheerleading culture to itself? You know, are these guys, you know, who are, again, you just got to assume they're putting everything they have into this. And I'm not necessarily meaning that means everybody's working 18 hours a day. I'm meaning some people will be able to put in 12 hours a day and they're working super hard. Some people might put in 18 hours a day. Some people might be working 7 days a week. Some people might be working 5 days a week. I'm not trying to place a value judgment on the number of hours that means, but they're putting everything that they've got by the nature of what's going on from, you know, a compensation perspective and an equity perspective. They're putting everything they've got into this thing. And when you've got a small team and their culture is one of celebrating some of those successes, that's great. When you have a small team and they're just grinding away day in, day out, week after week, I try to help be a cheerleader. I try to help these guys remind them that what they're doing is hard, that what they're doing is really incredible, and that they have a lot of the tools that they need to be successful. It is not particularly rewarding to grind away day after day after day, and it takes a long time to see success, right? I think it's, you know, there's sort of, oh, you know, I'll start a company, I'll get a product out, and I'll sell to Facebook for $1 billion. You know, that is just not the 99.999% model of what happens. And so I think it is really important to get some culture in there of keeping people fired up. Again, I think that's going to help your investment pay off, and it's going to help people feel a lot better in the jobs that they're doing to keep them fired up.
Any other questions?
I understand the point about when founders asking for help, that it's kind of difficult for them to several kinds of help. They may
Yeah, and I think, so a couple things. One is, it's extremely helpful to remind people you get one chance to make an impression. You know, it's unfortunate because you may have done a lot of great things, but if I get to meet you once, right, that's the one time. You know, so if you're setting up these great high-level meetings for a founding team and they're so busy in everything that they're doing, they don't stop and recognize. They may just not be conscious enough to stop and recognize, I may never get a meeting again with, you know, this person or with somebody at this firm. You can help. You can help it. You're going to have to educate a lot of these guys on a lot of things. And I think a lot of people who haven't been in those situations before, whether it's an entrepreneur, I see this all the time when I'm running companies, sort of you give a junior level person an opportunity to present to a board, right, or an opportunity to present to a very senior client. They may never, that is a growth opportunity. They may not have that opportunity again. They need to take their time, work on their pitch, and helping them with it. I think with startups, I've started to debate, or I guess strongly move to the notion of I'm not going to do an introduction until I like their pitch, until I feel like it passed my hurdle. If it didn't pass my hurdle, why should I refer on? Because that's my name, my credibility, you know, that's going on. And if I get the reputation of oh, well, she's a person who brings people who are unprepared into these meetings, that doesn't help anybody on the table. So that might just be another thing to think about as well.
The two questions. When do you give up on a team? Second question is, when do you fire the CEO?
Yeah.
They're somewhat related.
They are somewhat. So the question, when do you give up on a team and when do you fire the CEO? And I think there's a related question of when does the team say it's time to give up? You know, which is, you know, are they able to make that decision themselves too? So I think, so when do you give up on the CEO? Let me actually start with that because I think it's a really, really interesting question. The issue, I've had this debate with some people. Founders are unique characters, right? They've got vision. They got, you know, they were able to, assuming this CEO has a small team, they were able to motivate a group of people to follow them into the abyss, into the great unknown. They've assumedly, if you're deciding, you know, when is it time to give up, well, they've raised some amount of funding to move some degree forward, right? Very few people get that far. So there's a lot of uniqueness and certainly passion on the part of that CEO. And there aren't a lot of clear-cut recipes that says this is exactly what a successful CEO looks like, right? Some successful CEOs are very brash and have a very difficult time working with other people, right? They're very pig-headed about their ideas. Some, you know, investors really look for CEOs who are collaborative and are really good at adapting and adjusting because the marketplace requires you to adapt and adjust. Some people look at CEOs who are really great at hiring because in the end, if they're not able to bring a great team on board and, you know, do that, it's really hard to move forward. I think, you know, the one thing in common is you know, the person has to be extraordinarily driven. So the problem about, you know, especially in terms of firing a founder CEO, is to the extent that person has the vision and the drive in pushing this thing forward, the fundamental piece you have to ask is somebody has to lead the team. Who will it be? Is there another founder where you can mimic, I think, the drive, the passion, the knowledge, or are you going to have to go outside and bring somebody in? Again, I don't think there's a hard and fast rule to this, because I think there are examples on both sides. But I think there's an increasing amount of trepidation that I feel on the part of people to bring in an outside person into an early stage situation. if because of just that founder vision and passion, the outsider may have more experience, but they would be unlikely to match founders from a drive and a passion and a commitment perspective. And so you have to look at it, I think, situationally. If you've decided that you're close to the point of saying we have to remove a CEO, you assume you have to, I guess it's figuring out underneath of product hasn't made it. Is it the CEO or is it the CEO's? Is it focus? Is it team? Is it setting milestones and expectations? I know a lot of CEOs will be like, we're going to do $100 million in revenue by next year. And you know what? If you're buying that story, that's your fault, not his fault. I mean, you can say he shouldn't have pitched that, but there's, again, part of, I would argue, your job is to help make sure there's realistic expectations as to how fast things can get done. If the CEO is not able to build a team, then you're not going to have a company. And then the question is, should you just give up on the whole thing? Or is there really somebody out in the wings that you could bring in that would match the passion and commitment? I think the biggest thing is about building that team and needing to pull all those people together to drive forward. And then how much of it can be coaching. Keeping a founder CEO, but eliminating, I guess getting rid of the whole founder team, then I'd say, what do you have? And at that point, if the whole founder team isn't delivering, then you kind of got to go back on, what is it that's wrong underneath there? And it's not a hard and fast, again, I think all these things are situational, but I wouldn't assume you can just get rid of a founding team and then be left with anything successful. I'd probably come in and try to dive in and understand, is it team dynamics that's the problem? And then do you pick and choose among the founding team? Is it direction? Is it, what is it that's going on around there? And is that solvable or not? And then I think an interesting question is when do how can you coach the CEO to know when it's time to give up? If you're helping out these CEOs in incubators, I get some companies bounce around for a long time before stumbling on a model. Sometimes it's the right idea, but the timing is wrong. And staying alive for a few years is a really helpful thing. And so again, I'd say there's a little bit, not a hard and fast. I think the reality to the CEO is going to be, if you're bouncing around for a long time, you should not be expecting that you can continue to raise more and more rounds of financing, at ever greater valuations. And there might be some cases where you can get lucky, but is the CEO really prepared to tough it out as well, or the whole founding team, I should say. I don't mean to focus on just the CEO. And they need to do sort of that, come to grips with what that means. And if they're willing to sacrifice and keep it going, then right, go for it. But I think they're gonna, they've got to be realistic about that. Yep.
I've seen that some of the local angel investors here, sometimes it seems like as part of their investment, they're charging a consulting fee. It seems like that's part of what you were talking about. Like as an angel investor, you really should make introductions to support companies. What do you think about the angel investors who are charging for that? Is that the normal? And advising CEO companies, should we encourage them to go for influence like that? Or?
Well, I guess I would say it depends on how much, are they really spending that much time? If you're spending, I would say there's a certain amount of time you should just assume you're going to spend by having the privilege to invest in an early round at assumedly the rock bottom price to get into the company. And that just comes with the territory. If you're going to be spending significantly more time with them, I think there's no reason that you couldn't certainly ask for a consulting agreement. And it's certainly up to the CEO to decide yes or no and to put terms around that. I don't like people being held hostage. It's like, you're going to take this and all these other pieces come along with it. But people are free to say no. And investors are free to walk away if a CEO doesn't want whatever the consulting services fee, is that's being done. I think it's, it's pretty tough at these very, very early angel phases when cash is so important, to ask for any amount of cash at an early stage. You would hope that the benefit for the angel investor and the benefit for, in my view, the benefit of being an angel investor and spending the time is that I will get, I tend to view sort of a lot of karma in the world, and you help somebody out, you're there to help them early on. If this thing really makes it, then I trust that CEO, or frankly, I've been more on one occasion said, look, and even to ones where I wasn't angel investing, I'll just help you out for a little while. You don't need to pay me. I'll help you out for a little while, but just remember who your friends are, as you grow and do well. And whether that means I get an opportunity to invest at a later date, or maybe when they're bigger, they found I add enough value that when they're bigger, there's a consulting relationship, or who knows? Who knows how things unfold over 5 years or, longer? But I think that at those very early stages, cash is so tight for all these guys. But people can always say no. The flip side of it is if you're a CEO or you're an angel investor, there's no reason you can't ask for things.
Is this a common? Would you say this is a common?
So it is interesting where we'll see how some of the incubators also evolve, because some of the incubators are asking for more bigger or lesser pieces of the company and that sort of piece as well. And again, you can always say no. You don't have to sign up with that incubator if you don't like that deal. I think they would argue that, well, I have value to add that X, Y, or Z incubator doesn't have to add. Look at all these successful exits. So what might those things be? Whether it's an incubator or an angel investor. Look at all the other successful exits I've had. I have better relationships with the VCs, so when you go out and do your institutional round, the fact that I've backed you, the fact that I've mentored you is going to deliver a higher valuation and give you a greater chance of success down the road, right? And I think that's a pretty darn reasonable argument. Again, you can always say no.
What is the difference between incubator and accelerator?
Yeah, I don't know. I'd ask you guys that question. Yeah, that's really funny.
Because, it's cool to call yourself accelerator, but what actually you do?
Yeah.
Where is the difference between the service of incubator and accelerator?
Yeah, fair enough. It's so funny because I was thinking about exactly that same thing as it was in another similar kind of event, and people were using the different language, and I never stopped to ask everybody.
Yeah,
so
they use it interchangeably,
yeah.
But there is a difference.
Okay, so you feel like there's a difference. Because I would have said that it's around helping and supporting the startup with some mentorship in a variety of areas that allows them to actually accelerate their progress. And so that's where I tend to end up perhaps mixing the metaphors and maybe my own lack of understanding of a distinct difference. But I think that's the value that's added. If you're out there on your own, in your loft apartment somewhere, banging away on a startup, it goes a lot slower than if you're in a room with 10 other startups, with speakers coming in, with experts in product design or product positioning or fundraising coming in and coaching all of you, right? You're going to be able to move along much faster. I also think they help keep you on a schedule, right? Most of the programs have a set, whether it's 3 or 4 or 6 months, which keeps you moving along, and have some programming set up that really moves you down the trajectory. So I think they're great for CEOs, unless you know what you're really doing. You've done it before, you've got a team of people who've done it before, you've got a space that works, you know, and you've got relationships that you don't need it. But I think especially in Silicon Valley, the folks who come here who weren't, you know, maybe didn't go to Stanford, didn't go to Berkeley, didn't work at Google, didn't work at Facebook, you know, haven't built some of those networks, it's a really great way to establish a network. Yeah, last question.
Okay, I have also a question about mentoring, long-term mentoring. Is it possible to have your mentorship for long-term for some equity, for example, for 1-2% equity, so you have your time for, I don't know, 1-2 hours every week?
Yeah, so I think, yes. So from a mentoring standpoint.
Some advisorship or something like that. He has
Yeah.
advisorship.
Yeah, so from advisory perspective, you can certainly, again, it's a great way for the entrepreneur to try to get a long-term, you know, relationship. I think the most important thing that matters, though, is frankly, you know, do we really enjoy working together, right? Is that 1 or 2 hours a week? You know, I'm adding, you know, the right value, or we're enjoying, you know, spending that time together. Right? I think that's the first piece that both sides of the party.
There must be chemistry between.
There must be chemistry between. Otherwise, it doesn't really unfold well. I also encourage the CEO. I find a lot of CEOs like, oh well, you know, she must be really, really busy. I don't want to bug her. Well, you know what? I'm really busy. So if you don't bug me, like, I'll just keep on going and doing 100 other things. And so I always try to, you know, remind the CEOs, if you've been offered help and support from somebody, it's your job to follow up, because people are busy. And, you know, to make sure you've got, whether it's a weekly coffee, just schedule it, you know, or a call or whatever it is, so that's on the table. And I think some form of equity is certainly a great, you know, way to manage it. I think other things to think about are allowing, you know, those mentors to you know, a lot of times investment rounds get closed down over time. And again, for me, it's like, you know, I may be more willing to give some time early on than invest in. I have a half dozen companies where I'm giving some time to, where I'm not, you know, investing at this point. But if, you know, if they're able to keep moving along, I'd love to invest at some further point. So part of what I'm, I guess, a little bit hoping for too is if I'm adding value at a later time, they might be able to could help build an argument that, oh, Mary should be allowed to participate, you know, down the road, because she was instrumental in helping me, you know, move along, and I still want her to do that kind of thing too. And that's my time. But I remember, you know, from any of these negotiating things, you can always ask. People can always say no. I mean, I think you just have to realize that that's the way it goes. And right, people are free to set up whatever kind of arrangement that they want.
Thank you so much.
Yeah, so that was helpful.